Evening all, just a quick update on our New Zealand dollar trade. We were talking yesterday about a breakout above this level for our short-term long, a buy up to around here prior to the long-term downtrend. Today we've seen the dollar, which is here on the right hand side, the dollar index, shoot up to the moon. We had a Fibonacci on the dollar index. Like we said at the start of the week, we were waiting for a pullback. We didn't know if we were going to get a pullback on the dollar. And this Fibonacci we've put here, the dollar has actually retraced and pulled back today. And it looks like this is why we've seen the New Zealand dollar fall. First of all, from the rejection, and secondly, because of the strength in the dollar. Now, it looks like we could have our double top off the Fibonacci here and see the dollar start to decline. Obviously, this is all in line with Brexit economic news and worldwide news, and the S&P 500 and the stock market in the US. But looking at the charts, if we go by what we can see, a double top, a nice rejection off this Fibonacci area, could see this New Zealand turn around and continue our uptrend to our sell area. We may be wrong, we may be expecting it to reach here before the sell, and it looks like this could be the sell, but as we said yesterday, we've put our stop loss in. Our stop loss is around here on this chart setup, and we are still 50% within our stop range. We shall see. It may hit the moving average here and bounce off. It may start the turn this evening into the Asian session and start building momentum. It obviously looks like this is a real strong structured support resistance area here from the left, and if we go in further, we can start seeing the market is starting to turn, but we need a break on this level and a break on this level to start having confidence in the market turning. We can see on the hour chart here we need a break, and around this level we need a break to see the market start to build momentum. Yesterday we can see on the left hand side we just broke through, and at the 10-11 o'clock open last night the market shot down and came back up on spread. It didn't break, and all it's done today is fall. Like I said, we could be completely wrong here, or we might see the strength building back up in the New Zealand dollar to attempt to break this level and move on up to the upside. If we extend this level, we can see where it's got to break through. Here's our level then. Hopefully we turn and break through. If not, we will have to reassess, reevaluate this trade setup to see if this is the turn to the downside, or we still have this one final move to the upside prior to our long-term short. We need to keep an eye on the dollar index. Obviously this is the main driver for any dollar pairs, so it's a good indicator of what's happening in the markets. We had one of our trades stop out today on this. We had a roughly a 50 pip stop loss roughly on here, and it stopped us out just around here, unfortunately, because I think the market is starting to turn. Point to note on account sizes and trading These sort of trade setups, what you need to be looking at is a rule of thumb for your lot size. As an example, if you have a £500 trading account, ideally you should not be putting a lot size greater than 0.04, because this is roughly 3% of your account, and that will allow for a £15 drawdown based on a rough 50 pip stop loss. So for this trade, if you have a £1,000 account or more, this is roughly 100 pips nearly. On a £1,000 account, that'll be 6% drawdown with £30 loss. Any questions or comments? Let us know. Thanks for listening.